friends, today we are going to discuss about statement of cash flows. It is a most important financial statement because it indicates the company's cash inflows and outflows during a particular period. We are going to discuss the statement of cash flow by taking this particular example. This example shows the balance sheet for a company ABC and giving the data for December 31st, 2012 and December 31st, 2013. We start by taking the operating activities. Operating activities begin with taking net income. The net income in this case is 58,140. Then we have to make certain adjustments to reconcile net income by taking revenue and expenditure which do not involve receipt or payment of cash, like depreciation or gain or loss from sale of fixed assets. So in this case, the depreciation, as you can see, is 6,900, which is difference between previous year and this current year. Next will be gain on sale of investment, which is 15,000. This 15,000 is deducted from 90,000 and 105,000. So since we are selling the investment for 90,000 and the cash received is 105,000, there is a gain on sale of investment. We are going to deduct that gain on sale of investment. The operating activities also include the change in current assets and current liabilities. So, if there is any increase in current assets that are deducted and if there is any decrease in current assets that is added. On the contrary, if we are taking the current liabilities, there is an increase, we are going to add it to the sum, and if there is any decrease in current liabilities, we are going to deduct it. So, let's see what is the scenario of current assets and liability in this particular case. We can see the accounts receivable, they are increasing from the previous year to current year. We are going to deduct that amount. As you can see here, increase in accounts receivable, we are deducting the balance. Same is the case with inventories. Since the inventories are increasing, we are deducting that balance of 9,240. Let's see, since these are the only two amounts in the current assets, we go on to current liabilities. The current liabilities of accounts payable, if you can see, they are increasing from the previous year to the current year. Since the current liabilities are increasing, we are not going to deduct it, but we are going to add the amount, which is 7,320. On the other hand, the accrued expenses are falling from 19,740 to 15,840. Since there is decrease in current liabilities, we are going to deduct that amount. By taking all these adjustments, we get the cash flow from operating activities equal to 37,140. This is only one part of financial statement. Let's move on to the next part of financial statement, that is investing activity. The investing activities include the cash inflows and outflows from long-term assets. Now the long-term assets in this case, as you can see, are investment. Since we are getting the cash in terms of sale of investment equal to 105,000, we are going to put that amount in the investing activities. So cash from investment will be 105,000. And the land is sold. So land is purchased in this case. So we are going to deduct that amount. Less cash paid for land is 123,000. Same is the case with the equipment. As you can see, the equipment has increased. So we are going to put that down as less cash paid for equipment equal to 57,000. The investing activity shows cash inflows and outflows, that is from sale and purchase of long-term assets, and we get the balance as 75,000, negative 75,000. The last part of cash flow statement is the financing activities. The financing activities take care of cash inflows and outflows from long-term liabilities like bonds, issuing of common stock or preference stock, paying of dividends. So these all activities are included in the financing activities. In this case, since the common stock has increased from 36,000 to 48,000, therefore we include that common stock in the financing activity equal to 12,000. We are having the paid-in capital increased from 105,000 to 180,000. We balance here, which is added to the financing activities. And there is last thing which is there, that is retained earnings. There are retained earnings of 36,000 which are debited to cash dividend declared. Of this amount, we are going to see that how much is the dividend paid, not declared. So this 36,000 will be adjusted to the balance and we'll get the cash paid for dividend equal to 34,200. This will give me a balance of 52,800. If we take a accumulated amount of these three activities, we get that the total net cash inflow is 14,940. Let's see whether we are getting this as a difference between the previous year and the current year. We can easily see the difference between the previous year and the current year cash is same as what we got here, that is 14,940. That's how we get that there is a cash inflow for ABC company, and this represents the statement of cash flow. Thank you for listening to my tutorial.